India, land of ancient traditions, vibrant culture, a billion dreams, and a surprisingly complicated relationship with Bitcoin. Like, it's complicated, Facebook status complicated, but with billions of dollars and the future of finance at stake. You'd think with a tech savvy population of over 1.4 billion, a booming digital payment scene, and a massive young demographic hungry for new opportunities, India would be a crypto utopia. And for a while, it almost was. Bitcoin trickled into India like anywhere else, a niche interest for tech enthusiasts and early adopters. But then, around 2017, things went a bit wild. Prices were mooning, FOMO was rampant. Suddenly, everyone from college students to aunties and uncles were talking about Bitcoin. Local crypto exchanges popped up, promising easy access to this digital gold rush. It felt like the future was here, and it was decentralized. And then the Reserve Bank of India, India's central bank, stepped in. In April 2018, they effectively banned banks from dealing with crypto exchanges. No banking support meant exchanges couldn't easily process customer deposits or withdrawals in Indian rupees. It was like trying to run a supermarket where customers couldn't use cash or cards. The message was clear: we don't like this. The crypto industry went into a deep freeze. Many exchanges shut down, innovators moved elsewhere. It looked like game over for Bitcoin in India. But in a plot twist worthy of a Bollywood blockbuster, in March 2020, the Supreme Court of India struck down the RBI's banking ban. They said it was disproportional. The crypto community rejoiced. The floodgates reopened. And boy, did they reopen. 2020 and 2021 saw an explosion in crypto adoption. Millions of new investors poured in. India reportedly had one of the highest numbers of crypto owners globally. Exchanges were back, bigger and stronger. It seemed like happy days were here again. But if there's one thing more certain than death, and well, taxes, it's that the Indian government wasn't just going to let this crypto party go unregulated. In 2022, they dropped a tax bomb. But here's the real kicker: a 1% TDS, or tax deducted at source, on every single crypto transaction above a certain threshold. Think of it like this: every time you sell or even swap one crypto for another, the exchange has to snip off 1% of the total transaction value and send it to the government. Not 1% of your profit, 1% of the whole amount. Imagine you're a high-frequency trader, or just someone rebalancing their portfolio. This 1% TDS, even if you can claim it back later when filing taxes, which is a whole other bureaucratic adventure, sucks out liquidity and makes many trading strategies unviable. The impact was immediate. Trading volumes on Indian exchanges nosedived, some by as much as 70–90%. It was a gut punch to the industry that had just found its feet again. So why the tough stance? The Indian government, like many governments, has legitimate concerns. Investor protection, crypto is volatile, scams happen, money laundering, terror financing, and the potential impact on financial stability if unregulated crypto assets become too big. They aren't saying no to the technology outright. India is actively working on its own central bank digital currency, the e-rupee. It's more like they're saying, we want the benefits of blockchain, but on our terms. And we're really not sure about these private cryptocurrencies like Bitcoin. So where does that leave Bitcoin in India now? Well, it's complicated. The heavy taxation has pushed many traders to international exchanges using VPNs and other workarounds, or to peer-to-peer trading, which is harder to track. It's a classic case of regulation perhaps driving activity underground rather than killing it. Despite the regulatory roller coaster, the interest hasn't vanished. A core group of believers, developers, and long-term investors remain. They see Bitcoin and crypto as an inevitable part of the future, a hedge, or a technological revolution. What India needs is clarity, a comprehensive, nuanced regulatory framework that fosters innovation while addressing risks, rather than just taxing aggressively. The industry argues that the current approach stifles growth and could lead to India missing out on the Web3 revolution. So Bitcoin in India, is it a forbidden fruit, a misunderstood marvel, or just a really, really taxable asset? The answer, like most things in this saga, is probably all of the above. It's a story of immense potential meeting immense caution, of digital dreams clashing with regulatory realities. One thing's for sure, India's crypto journey is far from over, and the world is watching to see how this giant nation ultimately decides to dance with digital currencies.